Mike Tedeschi, Portfolio Manager over at Perspective Wealth Planning. And in today's video, we are going to take an in-depth look at two of the major U.S. retailers that have already reported earnings, and then two that have earnings coming up here shortly. We're going to take a look at Walmart, which reported earnings yesterday, was down almost 12% off of their earnings. We'll take a look next at Target, that reported this morning before the bell and is down over 20% at this point in time. BJ's, which reports earnings tomorrow, and Costco, which reports earnings next week. Now, let's talk about what happened with both Target and Walmart's earnings. They're very similar in terms of the pressures that these companies are facing. Revenue's up, but profits were down, missing on EPS both for Walmart and Target. The reason being, both companies cited some very similar issues. Costs soaring, all right? The gas prices have increased freight and transportation costs, which are eating into those profits for the companies. The other major issue is inventory, right? They do not have the ability to keep the inventory that they need on the shelves to be able to sell the things that they need to at the margins that they need to sell them at. Both lowered their guidance and outlook for the rest of the year. Now let's jump in and let's take a look in at the charts. Now, what I've got up on the screen here is a chart that goes back to 2018, starting over here. And we can see that Walmart really is traded in between that 127 and that 152 level for the majority of the last year and a half. This morning, after Target's miss as well, it looks like Walmart's going to open up right around this 128 zone, which is right back to the lows of the year for last year, right? And if we look at the chart this way, what do we have right here? We have that potential false breakout, immediate move back into the zone, and then earnings gap down and more selling pressure. Underneath of this 127, 125 zone, all of a sudden Walmart's 115 and potentially the lows from the coronavirus back around that 100 level come back into play. Those are some huge moves out of a stock that doesn't really make very large moves for the most part. Low beta name, having a 12% down day on earnings is pretty important to pay attention to. Now, Target this morning is I'm going to zoom in on an hourly chart so you guys can see this. Look at this move. Closed yesterday around that 216 level. This morning trading at 164. Let's go back to that daily chart and let's put 164 on there so you guys can see what this looks like on a daily time frame. This is the gap that we're going to have at the open here today. Underneath the lows for the year, underneath the lows from last year, basically right there at that zone. This area of support in on Target really comes back to the earnings breakout that they had in August of 2020 in at the 130 zone. You have a little bit of price action here, and for the most part, we have stayed above that zone. We're going to open up today right on this level, and this puts this entire area of support in play. A move underneath of that, Target's coronavirus lows come back down into the double digits at that 85 to 90 zone, and that's what could be on deck if this area doesn't hold. Now, BJ's and Costco haven't reported yet. BJ's right here this morning. I'm going to zoom in here because you're getting a gap down, right? And it's fallen. It's going to open somewhere around that 60 zone in tandem with the Target. You've got resistance up at that 71. You've got major support down at 54. We're trading in the middle of this range. Earnings on this on the wholesale here really, really important to pay attention to. Remember, BJ's and Costco have a membership fee associated with being a part of being a customer for those companies. That does help because that's money that just goes straight to the bottom line. So we'll see if BJ's and Costco can overcome the pain that we've seen out of Target and Walmart due to just a little bit of a different way in which they operate their businesses. Now, Costco here is sitting right on support, and it's opening right in here. It looks like 160 in the 160s, which goes back to the low of the year. This is a very similar chart to Walmart where we have a potential false breakout, a move back into it, and then back testing the bottom end on this zone. The last kind of area of support in on Costco is about 440, and if that doesn't hold, you're looking at a move back to the breakout around that 380 zone. right? We talked about this in the other video. I'll pull it back up real quick. The last major, great example I can show you guys of a false breakout is on the Russell 2000, right? The Russell 2000 traded in this range up here for a year, made its breakout, was not able to hold for more than a week or two, fell back into the range, and we know how that's gone. Oftentimes when you have a failed breakout, you get a swift move in the opposite direction. That is what we've seen so far out of Costco. Out of Walmart. Costco has the same setup. Target didn't have the false breakout, but hasn't made a new high since the middle of last year. So it has been a much weaker name than Walmart and Costco here this year. There's been a lagger in that regard. That major resistance up there at that 250 to 260 zone, and now a huge move, one of the largest down moves in Target's history here today. The market has talked a ton about inventory issues and the increase in transportation costs being a problem for the overall economy. We're starting to see that hit some of the biggest names in the market here this week. We're going to have to continue to pay very close attention to what the Fed does, what gas prices ultimately stay at, and if we can get some of those supply issues dealt with, that might alleviate some of the pain here in the second half of the year. Though the way it looks at the moment with these companies lowering forward guidance, they don't seem to think that the end of these issues is anytime soon, and the market subsequently is selling these names on that information. If you guys have any questions and want to talk about the overall market, feel free to reach out at mtedeschi@perspectivewealthplanning.com, or you can give me a call at 814-580-9881. I hope you guys have a fantastic day out there. Take care. I'll see you tomorrow.